Tesla's numbers were weaker than expected. I mean, much weaker. 387,000 vehicles when we expected them to sell more than 457,000. That was their biggest estimate miss in 7 years. And their first year-over-year decline since 2020. Tesla's a headline grabber, though, isn't it? Always will be. But let's unpack this. We know that there's been an awkward pause in electric vehicle buying in our country. China's hurting with real price cutting in the EV market. Berlin's been disrupted by sabotage. To me, this is simply par for the electric course in terms of America. We can blame higher interest rates and weakening economy, but honestly, I think the country's turn on EVs for now. It's like everyone who wants one already has one. Tesla's simply feeling what GM and Ford were feeling, okay? The real problem with Tesla is that it turns out to be a mortal car company and not an immortal tech company.
Tesla's quarterly numbers are out, and investors are disappointed. The Elon Musk-led company delivered more than 380,000 electric vehicles in the first 3 months of the year. That's down 8.5% from 1 year ago. Analysts had expected a number closer to 450,000, and the 70,000 car shortfall contributed to Tesla's 5% stock drop Tuesday. But in the global competition for electric vehicles, the news was better for the American car maker. Tesla reclaimed its title as the #1 seller of fully electric vehicles. Last quarter, the company fell behind BYD, a Chinese firm which counts among its backers Warren Buffett.
Right now, I got Jenny Horn with me in studio to check out some of the deliveries. This was like the most hyped Tesla deliveries number I can remember in recent memory, Jenny.
This is as big of a miss as I can remember in the company history. So they delivered around 387,000 vehicles in the quarter. That compares to the estimates of around 449,000. So that was like not even close. They did say this was partially due to some of their factory closures, like they had to close factory in Berlin due to some arson as well as geopolitical conflict.
That's right.
So they did mention that. They said they're also in these early phases of ramping up their Model 3 at the Fremont factory. But I mean, like, as far as first quarter deliveries goes, yeah, significantly undershooting what the street had been expecting. Now, I will say they did produce over 433,000 vehicles, but I couldn't find exactly what the street was expecting as far as production, but deliveries I think were more important here. And shares were down before we even got this number.
At the time of this video, Tesla has seen its valuation drop more than half from its astonishing peak of $1.2 trillion in 2021. While this results from a series of unfortunate events in Tesla's business and the EV market at large, the automaker's recent woes are mainly due to its Q1 delivery numbers, which fell short of analysts' expectations, causing Tesla's stock price to fall significantly.
We got the Tesla numbers. Should we do?
I was just do them? The stock's down 6%.
Stock's down. Let's go. All right, Phil's got the numbers for us as well. You want to just do that? What do you think, Jim? I want to check with you first.
Phil, please.
Phil, take it away. Give us those Tesla numbers.
These are not good, David. That's why the stock is down. Deliveries in the first quarter of 387,000 vehicles. Let me put that into some perspective. The FactSet consensus as of Friday, and it had been coming down, was for 457,000 vehicles to be delivered. First quarter of last year, the company delivered 422,000. So this is a year-over-year decline, the first since 2020 that we've seen from Tesla. And in terms of production, the company produced 433,000 vehicles. They do point out the fact that they had the change in the ramp up in production in Fremont as they come up with the new Model 3 Highland edition. They also had the Red Sea issue, also the issue with production at the Gigafactory in Berlin. Not said by the company, but clearly one of the main factors, guys, what's happening in China. And we know what's happening there as they have lowered their production, and we've seen the announcements or the reports come out of China, and that clearly has an impact here. That's why the stock is under the pressure that you're seeing right now. Again, 387,000 vehicles delivered in the first quarter. The street was expecting 457. Even some of the bearish analysts were expecting, 410, 415, not 387. Guys, I'll send it back to you.
Quick.
Sorry.
Oh, I was going to say, Phil, full year estimates, I guess we can say goodbye to some two handles, right?
Oh, I think that's a given. I think that's a given. Most were already bringing them under 2. We had a few people saying 1.91 million deliveries for the year as the estimate that they were putting out there. For some perspective, and I don't know if we can pull up the chart that we have showing annual deliveries, they delivered 1.81 million vehicles last year. And if they were to go to 1.92, 1.93, that would be about an 8% increase in deliveries. Now the question becomes, do they hit 1.81 million? Is there a possibility that they don't even make that? That possibility is out there, but it's early, and a lot of things can change. Obviously, production is likely to come back much stronger, and deliveries should improve in Europe. They've been clearing out a lot of inventory in the first quarter, and if things start to firm up a bit, then certainly we expect higher numbers in the second, third, and fourth quarter. To what extent remains to be seen. China's the wild card in all of this, guys. They are brutally competitive in terms of what's happening with EVs and EV pricing, and that's having an impact. There's no doubt that that's having an impact on Tesla. And remember, Shanghai is not just where they supply China, but that's also where they supply other markets around the world. So they can offset some of, the impact of just pure China and the competition there in terms of vehicles being shipped to other markets out of the gigafactory in Shanghai. But there's no doubt that this competition in China has had an impact.
Tesla's Q1 delivery numbers caused a mix of disappointment and fear, feelings that could probably be prolonged if Tesla does not experience a drastic and positive change in its operations and stock performance. In today's video, we'll walk you through the details of Tesla's Q1 deliveries, from what could have caused the drop in the numbers to what they mean for earnings and Tesla's future. We'll also talk about Tesla's main competitor, BYD, and its own Q1 deliveries. Before we dive into today's video, if you want to keep up with Tesla's latest updates, as well as other large caps, you can follow our Twitter account. We post multiple times a day about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
For so long, it's been like the margin story. They're saying we still have the demand there. We're just sort of readjusting our prices. But this is just straight up like you were not able to do what you had said, not even close.
Yeah, wow. All right, so we're getting punished right now. I mean, obviously this continues the trend for Tesla over the last year and a half as a laggard, but this is going to make it more complicated today too, because obviously it still has a lot of market cap to move around. Rivian numbers as well. We got those. To your point, weakness kind of across the sector, but Rivian shares seem to be holding in there earlier.
Okay, and Rivian's actually were better than expected, but mind you, they had already reduced the expectations by about 10 to 15% a few months back. So these were already reduced figures that the street had been expecting. So they delivered around 13,600 vehicles in the first quarter. That handily beat at around 13,000 had been expected by the street. They made around 13,900, and that compares to estimates around 13,800 units. So what was huge about their overall figures, I thought, is that they backed their guidance for annual production of around 57,000 units in 2024. But they have their own set of issues. They're still losing around $43,000 a unit on their most expensive models. So the new R2s are expected to be that way to somewhat bridge the gap, but they have to prove that they can make these vehicles efficiently. I know that mass market appeal with the R2 is seen as a bright spot, but right now we don't have that yet. So all we know is what we have from the previous quarter, and it was better than expected, but already reduced expectations.
Okay, so at least they're holding on to the previous guidance. Shares also kind of slipping now a little bit, but oof, boy, Tesla, that's going to hurt pretty bad.
I know, and it's like the stock that can't catch a bid right now. It's like every time we try to rally, then we're met with what I will say is there at least a good reason to see some pressure. You cannot miss expectations by almost 100,000 units.
Yeah, all right. I wonder how much the fire contributed. I mean, at that point, it's right, that one's kind of out of their hands, but still, I don't think it's all coming from that. So
Tesla reported that it had delivered 386,810 vehicles in the 3 months of 2024, a substantial decrease from the 422,875 EVs it delivered during the same period a year earlier. This drop was Tesla's first quarterly decline since 2020 and was far below even the most gloomy expectations of investment analysts. According to Wedbush Securities Dan Ives, analysts had been expecting Tesla's deliveries to be as many as 440,000 to as few as 414,000 vehicles. Tesla clearly underperformed, causing investors to fear the worst for the company's future. Even Dan Ives admitted that while analysts were anticipating a bad first quarter, this was an unmitigated disaster that is hard to explain. The Tesla bull added that he views this as a seminal moment in the Tesla story. a situation that Elon Musk has to either turn around and reverse the black eye first quarter performance or risk many more darker days ahead for Tesla, which could consequently disrupt the company's long-term narrative. Hello everyone, and welcome back to Investocracy. Before Tesla reported deliveries, many analysts were already downgrading the stock, including Wall Street and Wells Fargo analysts, and it'd be fair to say that we should expect even more downgrades thanks to the delivery numbers. This begs the question, is Tesla's gloomy story just getting started? Well, I think we need to slow down a bit because there's one other way to look at it. Many analysts attribute Tesla's bad delivery numbers to the slowdown in the global EV market and the increased competition in China. But the company's main Chinese competitor, BYD, is also feeling the heat. BYD recently reported Q1 deliveries of 300,114 EVs, which was less than what Tesla sold, allowing the American company to take back the EV crown. Still, BYD's Q1 deliveries were up 13% from the same period in the previous year and down by a staggering 43% from the company's record-breaking delivery numbers in Q4 of 2023. In addition to EVs, BYD delivered 324,284 plug-in hybrid cars for the quarter, which indicates that there's a demand issue for EVs and that more people are choosing hybrids over them. Take the US market, for example. Americans bought 1.2 million EVs last year, an increase of 30.6% from the previous year. On the other hand, Americans have bought a record 1 million plus hybrids over the same period, but this was an increase of 76%. Since the US is Tesla's biggest market and the company doesn't manufacture hybrids, it's really no surprise that its EV delivery numbers didn't meet their target at a time when many people are choosing hybrids. There is no doubt that the overall demand for EVs is still growing. However, the demand is growing slower than in the past, and the pace of this growth has been less than some forecasts. This one major factor has prompted some legacy automakers, such as General Motors and Ford, to pull back on their EV production plans and invest more in hybrids. The increased competition in China, the world's largest EV market, is also a problem. Tesla and BYD, the world's top two sellers of EVs, had to cut prices more than once to stimulate demand. But this has only led to cars sitting in their factories without being sold, and Tesla even had to reduce production at its Chinese plant.
Rebecca Elliott covers Tesla for the Wall Street Journal, and she joins us. Rebecca, why did Tesla's sales fall short, and why did experts think they were going to be closer to 450 than 380?
Sure. Well, this is the first time since 2020 when Tesla's quarterly deliveries fell year over year. And that came down to a couple of factors. One, interest rates are higher than they were a few years ago. We're seeing electric vehicle growth slow more broadly. And then also Tesla's lineup is getting stale. The company also pointed to a handful of production setbacks in the first 3 months of the year.
And then, so what do we know about companies like BYD, its market, and how does it compete with Tesla in this larger global competition?
Sure. China's BYD has been growing very quickly. It has a couple of strengths, particularly the way the market is shaping up right now. It sells electric vehicles and plug-in hybrids. It also has a wider array of offerings, many of them at a more affordable price point.
And help us remember, or maybe we didn't know at all in the first place, how does the U.S. compare with other countries in EV production and adoption?
EV adoption in the U.S. has lagged behind that in many other parts of the world, China, Europe, and in the U.S. right now, we're seeing EV penetration continuing to grow, but more slowly than it was just a year or two ago.
And what does Tesla say, or Elon Musk say, about this last quarter and kind of what the future looks like for Tesla?
Tesla has described itself as being between two growth waves. The first driven by its very popular Model 3 and Model Y vehicles. The next to come in a couple of years when it releases its low-cost car. As for this most recent quarter, Tesla pointed to some production setbacks, including shutdowns at its plant in Germany and a slowdown in the U.S. in production associated with bringing a refreshed version of its Model 3 car to market.
In Tesla's 2023 Q4 earnings call, Elon Musk acknowledged that 2024 would be a difficult year for the company. The company said that it's between two major growth waves, and it will continue to work on a new generation of cars and attract buyers with its advancements in its self-driving technology. Some analysts remain bullish on Tesla's long-term prospects because of its core business and technological advancements, especially with FSD. They think the automaker's disappointing numbers for this quarter won't define its performance for the entire year. For instance, Gene Munster, managing partner and co-founder of Deepwater Asset Management, said in his latest interview that there is a bigger picture for Tesla investors to focus on. Let's hear what he had to say.
But our next guest sees today's news as a test of investor patience. Managing partner of Deepwater Asset Management and Fast Money friend Gene Munster joins us now. And Gene, you personally are amongst those legions of investors whose patience will be tested. So what are you waiting for?
Indeed. Melissa, first, I am bracing as someone who's been supportive of what Tesla's doing and optimistic about where this company can go. I was just stunned today. I think that this caught me off guard. I was expecting it basically to be flat. Deliveries is down 9%. And the first question I asked, first order of business, is how bad is it going to get? The panel's done a great job of articulating there's going to be more negativity. I just want to put that in the context, is that going into today, the street was looking for about 15% delivery growth in 2024. If you look at the numbers they just reported and assume that they can grow deliveries 10% sequentially for the rest of the year, deliveries will be down 3% for the year. So this is probably more ugly than it seems even today. And given that change and look what happened in the stock, I don't think that's fully priced in. So I think, Dan, you've been clear about that $100. I don't think we're going to see 100, but I do believe that the stock is going to go lower because this is going to be what I think is going to be kind of the kitchen sink, where you're going to see analysts, I had that job for a long time, throw in the towel and say that this is going to be over for a long time. So I want to start there. Second is the bigger picture. And I think, Tim, you were talking about just, this EV and the EV picture. Just to frame that in, that's a $2.5 trillion market. What's the auto market on a yearly basis? Eventually, of course, it's going to go EV. Panel appropriately talked about what's the timing of that. I think it's going to come faster than most people think, even though this is such an ugly day on the delivery numbers. And the reason is that I believe one of the biggest factors in this horrible number was that there was so much excitement around EVs. People who typically buy a car every 5 years probably moved it forward and bought it 3 years, pulled a lot of demand in. I think eventually that just starts. I'm guilty of being too optimistic, but I think eventually they get to the other side. And one final thought, Dan, you talked about FSD. I agree that that is an important piece here. If anybody's tried FSD, the beta that they just put out last week, it is a step function better than what they've ever done. And so I think that is going to come probably in the next year or two. And I believe that that's going to be another catalyst. So that's where I'm at.
What can they tell us, if anything, in the next quarter or two that can sort of, I don't want to say solve certain issues, but for instance, if they come out with a lower cost model, does that solve for some of the weakness that they will see in China and address that next wave of growth that investors are looking for? Is there sort of a couple of things that they can do that can make the story a little bit better?
So you've got two camps. You've got the people who believe. And the reason why the stock's not down more today is because that camp still exists. The reason why this still has the market cap it does is because that camp still exists. They're not going to be influenced probably by another couple punky quarters. That won't influence it. The people who are skeptical, there's nothing that Tesla's going to say over the next, when they report their quarter on the 23rd, that's going to get those people more optimistic. But as an investor, I think you need to fast forward to, I'm already thinking about mid-2025. And at that point, we're going to have some really easy comps. I mean, this is a down 9%, March of 2025. is we're going to start to get easier comps. I think that starts getting reflected in the stock probably mid to late this year. So that's kind of the time frame. It's going to be rocky for the next several months. I don't think there's much they can say, Melissa.
Both Tesla and BYD are two companies that do very well, but since Tesla got its EV lead on BYD back, despite going through one of its worst quarters, it could mean that BYD taking the lead in the last quarter might have been a one-time thing. So, the questions we need to be asking are, can Tesla maintain this? And who will win quarter two? First up, this win isn't exactly a victory lap for Tesla since its deliveries actually decreased. And if you've been following the EV industry for a while, you'd know that car sales in China are always slow in the first quarter thanks to the Lunar New Year holiday, so this might have affected BYD as well. This means that quarter two will be completely different, and Tesla needs to take quick action to keep BYD and other automakers behind in this EV race. Tesla will need to continue ramping up production, and it needs to come out with affordable EVs to compete with the affordable options that BYD offers. According to Bloomberg, producing Tesla's $25,000 vehicle would require the company to toss out the traditional manufacturing line and move to a new manufacturing method called the unboxed approach, which Tesla pioneered. With the unboxed approach, Tesla will assemble car parts simultaneously in dedicated areas and then put them all together at the end, instead of having a large rectangular car moving along a linear conveyor belt. The company announced this revolutionary method last year and will likely start using it next year when it starts production on its affordable car so it can save costs to even be able to offer a cheap car. Tesla said the change could reduce manufacturing footprints by more than 40%, allowing the carmaker to build future plants far faster and at less expense. That could be a catalyst for Tesla's growth in the future, but another thing the company should focus on is developing its technologies. Things like a next-gen battery, improved range, or even more upgrades to FSD can draw in more customers for the automaker. Keep in mind that Tesla gets compared to many Chinese EV companies, but aside from BYD, none of these companies are actually considered competition for Tesla. Companies like NIO and XPeng have been around for a while, and they make great products, but they aren't profitable. In fact, NIO lost nearly $3 billion last year, and XPeng lost to just under $1 million. Tesla is still ahead of the competition when it comes to EV, and beating BYD this quarter proved it. And since Tesla plans to increase production efficiency with a new production approach, it'll be able to save factory space and manufacturing costs, so the future doesn't look terrible for Tesla. That said, what then do we make of Tesla's lower than expected delivery numbers? Well, right now, it depends on how you personally feel about the automaker. However, we'd like to stress the importance of critically evaluating a company's potential before making any decision on your investment. Tesla has a lot of potential, and this dip could be a great buying opportunity. But what are your thoughts, though? What do you think about Tesla's Q1 delivery numbers? Let us know in the comments section. If you would like to know more about the latest updates about Tesla and the EV market, then go ahead and click on the next video on your screen. See you there.